Good morning, everyone. Got back home a little bit early or earlier than usual. Bam, 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 bam. I think there's news today, if I remember correctly. 22nd. Really? That's interesting. Why did I think there was news today? Hmm. Maybe this is why. Maybe this is what I saw. Let me just check. Mm-mm-mm. How do you filter this? I may or may not have said this before, but this is the first um economic calendar slash news event source I was exposed to. So I still have this app on my phone, but I don't think I don't see anything here. Maybe I just saw the wrong date. Maybe just bond auction is at 1 o'clock. And this looks like something. I don't know what that is. Nonetheless, moving on. So, initial assessments. Can get this off now. That was an old pool of liquidity. I mentioned that this is the order block that needs to go for me to entertain that this high is coming. We open with gap, non-stop. Runs higher since that gap. Out of boredom, I got a little short last night, just a little one. But then we rallied again. So let's see what's going on. If I assume that this is bullish, then the first thing I want to know is where's the pool of liquidity. If I have an order block and the price is trading this deep in an order block, to keep myself from going crazy, I entertain the idea that there could be liquidity residing inside the order block, just to keep myself from going crazy. If that's the case, then it would be Friday, the 27th high. So get rid of some of these lines. If we are this far up and this market is going to respect this bearish order block, then I don't want to see expansions on any time frame taking place above this daily high. If that happens, I'm entertaining the idea that this wants to get taken. For now, I am going to err on the side of caution and say, right here is what we're reaching for. So with that being said, I'm going to go to the daily chart. On this chart, establish my key levels, establish my bias, and then allow time to do the rest. So pretty straightforward. Tag that daily high. We just let the OCD flare for a little bit. So for all intents and purposes, that's my liquidity pool. We have bodies here rejected, so logically that's your rejection block. So I have two key levels that are above me. I want to see them reject this high. If volatility comes out either at 8:30 or 9:30, I need to see them reject this. Trading above this on the M5 or M1 chart will have me sitting down and doing nothing. Okay. Now that that's established, let's jump into the M5 chart. So here we have price trading into the pool of liquidity. Nice and easy. We have our submission range from yesterday. Beautiful delivery. A little bit on the messy side in the beginning, but the buy side delivery was easy to trade for the most part. I think I saw one person hold it all the way. I didn't hold it all the way. Just scalped back and forth inside here. Now, with this new submission range, let's see what information this has for us. I don't need anything beyond what's here. Key level. Price is there. If I'm bearish, depending on what methodology I use to execute, it would be what constitutes a change in direction here. For some person, it's just an order block. For some person, it's a market structure shift. For some person, it's whatever. I have my key level. I now know what I want to see at my key level, and then I will participate. For now, it's going to be a rejection of this. So if we are getting a rejection, as we are getting here, I want to start framing, what's that word? Can't find it right now. Something that says I'm on side. So let's say narrative, for lack of a better word. Let's say we just hit a key level in buy side delivery, and I now want to see what frames bearish narrative around here. The simplest and easiest way to trade anything, any market, any time frame, any time of the day, is to understand that one, a range is going to get created. All ranges are timed. Right now it's 8:31, which means this is wrapping up. This is wrapping up. So the good book says 2 minutes after any news driver is when I start hunting. There is no news driver here. I'm not going to entertain a lot from the 8:32 candle. Instead, I'm going to wait for M5 closure. So it's still early. No need to be forcing anything. No need to be trying to do anything. But right now, I want to wait for M5 candle to close and then use that to frame my decision. We're not going to just blindly wait for it to close with no expectation. Since this right here is the first time we traded towards the objective, then it failed, then the market runs through that high into the objective. This right here that we're getting is the stop hunt leg. There's only one FEG here. So the good book says, if I get M5 bodies printing below there, I can look for shorts. I could scalp longs, but I don't have anything to latch onto. So to the upside, I'm not feeling that. If we fail to make a high and then it drops deep, then I can entertain a new high. But for right now, there's nothing to target besides hoping this continues higher, in my opinion, based on my rules. So automatically, I know that I can't get a trade before 8:35, 8:36. So until then, I'll just look at what's going on in the chat. Are we on Chicago UTC 5 already? I'm always on UTC 5.
Hey, good morning.
I'm always on UTC 5. Maybe I haven't been on a live call in a while. It is always Chicago time, but this isn't probably not Chicago time. But I know what I'm doing. I don't change the time zone.
Hey, Kish, if you got a free minute, can I ask you something?
Always.
Just because like we're not looking at a setup right now, can you just drop into M1? I just have a question about some narrative reading.
Okay.
So if this was our high, or that was like our level, key level that we were looking at.
Mm-hmm.
I see this is the failure swing towards it. There's two FEGs here.
Mm-hmm.
those both get filled. There's no entry here, but like, how do you like? To me, I see this as like almost like Zoom, where it's
Okay.
like I see the narrative change here, and then like once we OLR the high, I'm
You're
like
short.
for here for a short. And like I'm just wondering, is it because you don't is it a timing thing for you? Or am I jumping the gun on narrative there? Or like what are your thoughts on how I'm reading that?
Okay. So first things first is um every trader, every single trader who gets to understand some technical elements of price action will always make the same initial mistake. And that mistake is kind of what I was touching on yesterday, where you look for framework and then impose the narrative on the framework. So you're seeing higher highs and higher highs on the chart. So you say, okay, market's bullish. This bullish order block must work. Then if for whatever reason it doesn't work, then suddenly technical analysis does not make any sense. It's a similar approach to that. If we have our key level, failed, it breaks down, and it comes back up, I can't look for a short here. That's logical. But let's say
Is it
we took the key level here, then it starts to break down. Looking for a short here feels like the right thing to do.
Yeah.
What I'm going to say is if we are here at 819, let's say we are there at 819, and we just run a pool of liquidity. In the case of a mile marker, what would you want to see in this pool, this piece of price action here, get violated for you to say, okay, now I'm seeing a shift in market structure, or now I'm seeing a shift in order flow? Right. First thing you're going to look at is where did the stop run start? Once you can find the stop run, we know if they're trying to get back below the start of the stop run, they're resuming order flow. Like, annotate, bam. If we're on a path and that path is going here, higher, let's make it pretty. Bam, bam, bam. We're going up, okay? But we've been driving for a while and we get tired. And right here is a rest stop. If we go here to that rest stop and let's say we're updating someone on our progress where we are, it's only reasonable that we don't tell whoever that person is that we're back on the path until we are back on the path. So you have to think about the same thing with stop run. This road is loosely alluding to order flow. Rest stops off the path would be like a stop run. So as long as you're still on that stop run path and not yet beyond, where it started, either we're still resting or we're still not back in line with order flow, which is essentially the same thing.
Yep.
Okay. So in this case now, it's the reverse. It's the reverse, meaning we want to be on this path. So we want order flow to be bearish. Order flow is not bearish. Okay. We want order flow to be bearish. Order flow took a rest stop in an environment where you're expecting bearish order flow. For us to assume that it's back on that bearish path, then we need to get back off the rest stop road. Like a very loose definition, but I think it makes sense.
Yeah.
So over here, prices on that key level with a rest stop, then it returns. If you want to be bearish, it has to start wrecking these. And I'm running out of road analogies, but this would be the first area you want to see the market trade below. Coincidentally, that is overlapping with M5, I believe. Just eyeballing it. I think that's overlapping to an M5 level. So now I can say we've gotten to an objective. Is it the objective? I don't know. But I'm expecting that if we're going to see the market trade lower, these are the levels I want to give up the ghost.
Yep.
So now you can use whatever time frame. You could use an M15 chart for the persons who like M15 chart. And then you could start reading same thing. We have a key level, market's trading towards a key level. What's it like? First thing I'm seeing on this is we're not, even though we're getting big green candles or we're getting green candles, this is not closing above the previous one. This is not closing above the previous one. This is not closing above the previous one. So if we're keeping in line with this slowing momentum thingy, whatever it's going on here, I would say evidence that they don't want to close above here is good. Now, this is a M15 chart with 3 M5 candles. And if we typically get like AMD and M15, then we could assume quite loosely, this is not a rule or a law, quite loosely we could say, I would want to see the second M5 candle starting to show willingness to stay below here, which suggests that the third would also follow through, and then the M15 candle overall will stay below here. If I'm looking at an hourly chart, same idea. We don't have big green candles here, but we have green candles. So I would start to assume that if this is going to be bearish, I'd want to see this H1 candle show willingness to not close above here. If it should close above here, then we have to look at the low. Those are the if this then that statements. It's not just we're trying to be bearish and it's closing above this high, I'm going to sell the next candle. That's a little bit on the risky side of life, right?
Yeah.
So, which is why I'm saying M5 is what I'm going to be looking at. I didn't look at M15 and H1, but just a simple context of how this is printing is suggesting to me that M5 is where I should take my narrative from on that M1. I don't know what's the best way to explain how you arrive at that level, but I don't want to say experience because it's not experience. It's more like intuition. So now I have a refined level on my M5. This is as high as I want to see the market trade for buy side delivery. If it's getting there, I wanted to reject it. So new spikes, there's no new spikes anytime soon. Open of the hour, equities open. One of these are going to show me the displacement I want. Once I get a displacement, I'm not going to go, sugar rush and say, yes, this is it, and just start selling. I need to see levels starting to give way. And this is so far gone that it doesn't matter where we get a setup. The closest area that you would look for is over 100 points away. So getting a decent trade today should be worth the wait, in my opinion. If not, let order flow do whatever it wants. Today is what, Wednesday? And I'm pretty sure we should be good for the week so far. If we don't get a trade today, shouldn't be that big a deal. Yesterday was relatively easy. Monday was relatively easy. Unless you go give it back, I would argue that you should be fine.
Great stuff. Thank you.
Cool. So this is the first M5 candle in that. Is it? No, it's not. This is the last M5 candle in the 15-minute candle. So in about 30 seconds, I lose interest in trying to short because it's closing above the level, which means the M15 is closing above the previous M15 high. We put a down candle right on that high. We're probably going to retrace and pull and push into that. I'm not buying this again. It's not worth the risk. I don't care what RR says. This is not worth the risk. So let me just check the chat. Gratiano went long. So the submission times 2 p.m. to 6:15. Easy to follow along. I went long at 8:20. It's a decent long. Decent retracement push.
Question for you, Kish.
Mm-hmm.
I don't know if you've been asked this or have spoken about it. Um, I've seen. Hold on, bud. I've seen on Twitter that you've been sharing some screenshots of what is it, like all the Nasdaq stocks and like their 5-day closures, averages, something along those lines. Yeah.
Mm-hmm.
Um, does that serve any major significance in your day-to-day outlook on what should happen, or is that something kind of new that you're looking into? Does it play a role in your bias, I guess, is the best way to put that.
So what I've been along with someone else, I've been playing around with the idea that there are some fundamental data that can be helpful to day traders that we just don't look at because we're technical traders. So I'm trying to share, or let's say spread awareness of those data and those information, and then show when technicals align with that and when technical doesn't align with that, in hopes that somebody will benefit from it. Put it like that. But for my day-to-day trading and bias, it's all time and technical derived. Yes, there's an option trading is coming soon. As a matter of fact, the person sharing the data is an options trader. But looking at this now, I'm starting to like what I see. I'm looking for closure, and then I want to sell the retracement. So the next candle at 8:48, I want to sell.
It's an interesting wick you have, John Boxed.
Oh, was that M5? So absolute best case short entry looks like this, and that's going to be my first trade of the day. Oh, at trader, yes, but there's a gap in there. So because that gap is in there, I'm not too picky about my entry. Why is she so close to my stop? Like she wants to take me out. Who decided that? I wonder if it was I jumped off the M5 for a little bit. Yeah, just realized, just remembered that there was an M5 order block here. Risk is already managed. I'm not going to change that. This was a, I'm not going to say it was a mistake. This was an impulsive trade. But I'll take it on the chin. I forgot that the M15 high put an order block there. But let me see. This is showing it. What's that word? 50-50? 50-50 trade idea. No glory in this win. Probably a tad bit stubborn to still be in it, but that loss is not going to kill me or blow my account. All the way till tomorrow, till the teach part of the call. Fair enough, fair enough. Fair enough. So what you can expect though from the option stuff is, you know how some persons have like a pre-week call, what they want to do and all that. All right, so that just stopped me. Wait, surprisingly, that didn't stop me. Okay. So on my feed, this high is not taken. Anybody else or just me? Maybe it's coming, but on my feed, this is not. This didn't happen. Okay. This is the second chance. Let me see.
Yeah, futures didn't take that high either.
Oh, because I'm like, wait a minute. What's going on here? Okay, now it took me. Thought I was getting away with something. Spreads reached up and grabbed me. But again, not mad, not upset, not revenge. It was a little bit, it was a little funny. Still solid. Now I know what I did wrong. What I did wrong was I framed this on the M5 chart and then I went into the M1 for confirmation. Typical, like classic mistake. This is an M5 level. I need an M5 closure below here to make this bearish. So now I'm gonna have to watch. If I go back to the M1 chart, I have to watch time. I have to look at 855 and see if 855 is below that level. I can live with that. I can live with that. So reclaim the level of visual references. We want to see if right there, at that time, we are below this middle line here. And that will tell you that the M5 is closed below it. You could learn from my mistake. Can't believe that stop. What if this is the high of the day? And it does give me an entry. It didn't stop at the high of the day. Wouldn't that be fun? No worries, Tyler. I understand. My daughter is not yet up, so you can chill for a little bit. For the like ear quotes newer trader, this is a nice way to stay Stay away from classic mistakes as well. If you're looking at a higher time frame level, and you know that you need a higher time frame closure, you can just mark the time when the higher time frame is going to close, and then use that as confluence rather than switching back and forth between time frames. 5 seconds. 3, 2, 1. So the M5, I'll just show you, did not close below that level. There. The new M5 is here. We want to see if 5 minutes later, 9 o'clock, we are below that level. So far, it's acting like a typical bullish level, bullish IRB. Nobody's below M1 as an order block there. It's using that as a push. So no need to overthink what to do. Just a silly little mistake on my part. I feel like I was. Oh, man. All I can say is good times, good times. Just check something on the M5. Bam. Move this to open price of this big green candle. Or maybe the low. Eyeball that low. So at the moment, nothing to do. I want to short this. I have every intention of shorting this. I'm just waiting for something concrete to short. Closing below this at this time is the first thing. Second thing is willingness to displace here. Maybe put a breakaway gap here. It's probably at least one person who is super aggressive and already short, and they tell me that they got a better entry. I see you. So we had one instances of M1 closing below here, just one, and it popped right back up. So first thing you should be thinking about now is DR logic. Why DR logic? This was the initial high that we wanted to see stay in the market. That's where I sold. We ran that high. Buy side. We're looking for evidence of sell side now. This is retracing here, which is going to, in my opinion, make this portion efficient. Okay. So for peace of mind, let's look at that. Look at that range there that we're looking at. See that range here? We had buy side run, retracing in the upper 50% portion, and it starts to push. Once you start seeing them going below up candles and there's no inefficiencies up here, you want that 50% level to act like a brick wall. If it should run it for some opening volatility, you want it to reclaim it. Go above and come back and close below. As of this moment, I want to see this to start moving faster because up here is efficient. Buy side is run, we retraced, sell side and expand. M5 again did not close below the level. We don't have confirmation for shorts yet. Oops. So now we continue to hunt. Are we below this price level at this time? We're probably going to get it earlier. Probably. If it's actually bearish. If it's not, then you're just not going to get it. And I'm holding fast to my, I don't want to buy here. So should anybody feel confident enough to buy, don't let me stop you from being great. My rules prohibit me from being a buyer here. Not saying I wouldn't buy today, but not here. Maybe lower, much lower.
Are you just using that immediate rebalance because it was the most recent one created while we were making these highs?
Yeah.
Okay.
Okay. Now automatically, I feel like I want to sell the open of the next candle or above the open of the next candle. So hitting that level beautifully. There's at least one person who went short for no good reason. Let me check the chat. Did not wick above the open, did not get an entry. All right. That was quick. All right, so I'm gonna short a little early. So instead of going full risk, I'm going to break my position in two. Put my first position here. And then wait. Getting an entry this deep is going to open me to too much risk. So that's why I'm cutting the position. Now that we're showing willingness to close below here, I want to see if this is acting as resistance now. So stay below that level, especially as we approach this time marker. Then I can use this as an order block. Little patience would have gotten me a better entry. It is what it is.
I sold the 8 o'clock cash.
You sold this one?
Yep.
Who said that? Takes a whole lot of.
Assassin. Morning.
Oh, okay, cool. No, it takes a whole lot of courage to do that.
Oh, ballsy. Small risk.
I had to know the name. Okay, so now I want to see this act as an order block. Okay, so this goes here now. Act as an order block. And life is good. This M5 should be big and heavy. Since we opened here, it's all the way down here. So again, treat this as an order block. The moment of truth is coming unless the M5 is being held. We should be having some fun now. Points to note, there are no FEGs here at the moment, and I'd ideally want to see an FEG get printed below this candle's low. So the first thing, no, not the first thing, I don't know why I said that. So what I'm going to be looking for while this is printing is, do we get a candle high below this low? That's the next requirement for this to be faster. A candle high below here. So this closes. Let's see if this high does not get back to that low.
And then will you use that as your breakaway gap reference?
Dark pool reference.
Right. Okay.
No idea what that is.
No. I do know what it is. I went back and studied.
Oh, cool. Just checking.
So are you just gonna, but what I don't have is the nuance there. Are you still gonna use that as a reference for order pairing also with narrative?
I'm gonna reference this since it's the first one in where I'm expecting the expansion. Remember, order blocks, classic ICT, each market environment is paired with a particular PD array. When we saw this, we said buy side, retraced, so sell side and expand. Expansions, classic ICT are paired with order blocks. So I know I want my order block here. Order block, FEG, breakaway gap logic. Not breakaway.
Yeah, that's what I meant. Yeah.
Yeah, but the logic.
Yeah. Different quote unquote PD array, same logic.
Indeed. So now, if that's the logic, it means this portion of price should not want to make any friends.
Right.
There we go.
I love this.
Oh, we should call that the voodoo line.
So now we're back to looking for the old, I don't know what you call it, what to call it. That level that we wanted in the beginning. We're back to looking for that level to get traded to.
I joined the call late. What was the level, if you don't mind my asking?
The last low before we expanded through the key level.
Sure. Yeah. Okay.
This is an old daily failure swing.
Oh, okay.
Yeah.
Yeah.
Nice market maker logic for the market maker fans. Let's move this line a little bit to the left. This is an old M5 FEG, remember? So we want to see them write that as well.
When you have a target so far away and then volatility is coming in, 20 minutes or so, how are you managing this position?
So I have two positions and I'm not managing them at all. This doesn't, how do I explain that? This does not need any type of micromanaging.
So your stop is still, assuming you have one, your stop is is still at the original reference point.
Order block high.
Yeah, yeah, okay.
Yeah. You're a funny one. I see what you did there. Excel sheet does target. I don't know what you're talking about. So M1 at this time did not close below here. So I'm open to the idea that retracements are coming next. If retracements are coming, then IOFED ideas at this candle high right there. That's it. Just shift this over a little bit.
And can you use that same like close above 50% there as kind of like an invalidation
For this,
of the IOFED bag you just pointed out?
um, it's, I don't think so. I don't think it works with IOFED bags. That logic is more solid when you use breakaway gaps.
Okay.
But I'm already not expecting it to want to dig deep into that. That's why I'm saying IOFED. Just hit it and go. And then get below this M5 FEG. Get to the target. And that's the first scalp of the day.
Did you realize that the I think was one of your 2-bar sell signals on the H1?
On the H1.
So it was right
Right
below
here?
an H1 dark pool, if you want to use that parlance. And then from, let me see, maybe it's a 4-hour. I show multiples, but it was I had that red line marked off like that was our high. It's almost like the things you teach us work. Just saying.
Oh man.
I
So I
get
want to see this get faster. Just wrap up this objective, and then we could just kind of have a mellow equities open. It should be a
I
lot
get
of
version.
stuff. Huh?
I get version 2.6 later.
Ooh, fancy.
I've
So
never been called fancy.
while most persons are probably just looking at the short and enjoying it, David, you should be seeing a little bit more. And if Gentler is here, you should be seeing a little bit more. Leon is here.
Very pretty.
You see. All right, so expecting this M5 candle to close below here. I'm already expecting this to be done. 2 minutes. Can we get 2 big candles? Be nice. Be nice.
So
2 big
beautiful.
candles. You can do this. I believe in you.
That's what I said.
Just give us 2 big M1s.
Does this low become your new reference point?
Which one?
This one. Yeah, exactly.
Reference for what exactly?
Like kind of how you're managing your trade. If you were to see, you're using this bag here, but if you were to see common bullish stuff here, would you kind of be thinking about managing your position, or would you allow that to just provide some kind of retracement in your mind?
I don't think this requires any retracement. In my humble
Yeah,
opinion,
that's what I was
I
wondering.
don't think we need any more retracements. So that's why I'm calling big M1 candles
Right.
to get here. And then this is where you have to manage. Even if I don't say it, as we start trading into this order block, please manage your trade. Right? Let's be realistic here. What is the logic behind the um Gratiana, I will talk to you. I'll talk to you. But yeah, as we run down equity into an order block, please manage your trade. If it's either going to be going break even or something else, but manage your trade. I still can't see a reason for this to retrace, unfortunately. So let's go. How does M5 look like? Big candles on M5. Yeah. Efficiency. Bam, bam, bam. If this is retracing, then there's a chance this high could be in jeopardy. So again, manage your trade here.
Yeah, that was my question.
Yeah. But all the objectives are far away, so I'm keeping runners. And should equities open, stop me out. Let's go back to hunting and reading again. I want to have a runner today. Today feels like a nice day to have a runner. When's the high of the week? Hey, I see what you're doing there. That's nice. It's a nice little function you could keep on to read them in real time. So you'd automatically say you don't want to see closing about 50% of this week.
Kish, because like everything above us is efficient though, like I understand what you're saying that if we retrace the high could be in jeopardy, but wouldn't we still want to be like paying attention to 50% of like that efficient area before we're thinking about taking the high?
Yeah, but then because we're already in the trade, you'd be leaving money on the table. I remember it's still it's not even equities open yet. So taking what you made on a trade here, waiting and then making another decision later is responsible versus having a decent short scalp and then just sit and watch it come back. Plus, remember I took a loss earlier, so stop the bleeding. You take a loss, you're making enough to cover that loss. You don't start thinking I'm swinging for the fence. You stop the bleeding first. If you've ever traded prop, you should at least one time encounter an instance where you took a whole lot of small wins and then they built up, then you just sized up and you passed the challenge. Versus sometimes when you took a loss, you had an opportunity to recover the loss, but you said this is going to be the monster trade, and then you end up getting less than you wanted. So those things kind of slowly mold you over time to say, I'm here for the money, I'm not here for perfect track record. And again, we're approaching equities open, so realistically, anything can happen. It could whiplash with a whip that means absolutely nothing. So see, Imagine not doing anything with your trade and us watching this. I'm sweating. Put it on the M1. Probably clean on the M1. Or more terrifying on the M1. All of that would probably have you sweating. No need to sweat. This should probably try to be getting below that M5 level that trader was marking. Oh, trader has the eye of the tiger. He sees everything. He sees everything. But yeah, close below that little gap there, volume imbalance. This is all I care about. Willingness to get below here. That sets the stage that for the rest of the day, I can look for shorts. We're at a high. Liquidity was taken. This is as far as I thought it would go for the rejection block. Lots of fractals here, and whatever time frame you choose. Yeah. Equities open is coming. Be careful. So all in all, not a bad trade for the RR folks. I went early in here. My entry is basically inside here because I went short above the open of this candle. Let's just say it looks like this from an RR perspective.
That's where both your positions were, or that was where your first one was?
First one.
And the second? IOFED?
I I had one here and then the IOFED.
Yeah.
You know me. So for the RR folks, solid 4R. Solid 4R. Nice market maker model. There we go. For the folks who
beautiful.
it was a nice one. It really was a nice one.
It was just very
all
logical.
the elements. Did we fail the objective last hour? Is that why we targeted the lows in this new H1? Usually waits for a new HR this week. Oh, so I like questions like that. Questions like that. To some persons, it might sound like, oh yes, that's a reasonable question. But to me, it shows me what you lack in your understanding. And I mean that in a good way, right? Time is a tool. If you trade time deliveries, you have to look at it like a tool. It's either going to be a tool for expanding the market or a tool for contracting the market. This here sets the framework for everything we wanted. So remember, this is the daily failure string from all the way over yonder. We read it. We read all of this using this level and here. This is what we want. This is what we will allow for because we're not perfectionists. Fail to get there, retrace. This is a stop run. This is a stop run. Okay? Whenever you have an objective and the market pushes towards it and fail, retraces, does not break structure, then it runs the target. This is a stop run. So this changes the narrative. This changes the order flow, and that's why we have this low marked. Trades up. We're looking at M5 to stay in line with order flow. M5 FEG, all the good stuff, all the good stuff, all the good stuff. And we just keep reading it afterwards. This part here is the fun part. This is where the range starts to print and we start seeing elements of things we understand. In particular, we thought this was going to be the high of the morning, or I thought that. So we went short inside here with a stop above here. They ran this, making this a buy side run. Okay, no big deal. We ran buy side in a bearish narrative where we're already above liquidity, print a dealing range. So now we're expecting three things to happen after this high gets taken. Sell side run, retracement, and an expansion. The order changed here. In classic delivery, we have buy side, sell side, retrace, and expand. Here, the order changed. Okay, we had buy side, then it dropped, failed to run sell side, retraced. So in the four things, there's two things left. Sell side and expand. That's why I started demanding FVGs to be printed here. The breakaway gaps. It's expanding and we get an order block. That's all the things that you want to see. It's free money. So sell the order block. That's what we did. We sold this order block, targeting the sell side liquidity down here. That's a trade. Once this happens, if you keep in a runner, then you're keeping a runner. But equities open is coming, and that comes with volatility. So you have to be realistic around that. Trade management is important. There are persons who don't know technicals and they're just managing trades and managing risk and managing money and making money. So the best of both worlds. Technical knowledge, proper management of trade and money and risk and all that. You should be successful. But yeah, I'm going to watch this going into equities open, see what happens. But for all intents and purposes, this was a nice trade.
I have a couple questions, if you don't mind.
Sure.
Okay, so if you can scroll back to like 4 a.m., please.
M1?
M5, please. So I basically got this from the H1 really, but yeah. So if you, because I was trying to study like what you showed yesterday on the call. So if you put the H1 up for just a second, I'm gonna try to try some annotate. So all right, so 4 a.m. So yeah, I think it's here, right? So to me, I saw the expansion, right, above the high, and then it retraced, right? So then I jumped to the M5, and I was looking for, if you go to M5 now, I'll show you. So on the M5,
this was the high that was taken on the H1.
yeah. So 4 a.m. So I saw all of this. Where is it at? Let me. So this order block here, right? So I entered early on, I think the M1, I entered here, and I was expecting to take here immediately, but it didn't. So what I did, I drew, 50% of this, and I expected something to happen here. So I noticed a retrace. So I know, the down candle, there was no down candle that returned to this down candle. So I was trying to use that logic of your fair value gap understanding. And it helped me here because usually I would struggle if it moves up here and then I start to retrace, I would panic. But because of what you showed yesterday, with the fair value gap, I waited for a down candle to be to tap this down candle. Is that like something to expect in retracements? Like if it's an order block push and there's no down candle that comes to it, wait for one to come down to it if it's retracing?
So
Or if that makes sense.
yeah, no, completely. I understand. I think we did a lesson like this like way back.
Yeah.
Before the platform, before WAP and Patreon, there were the BPR lecture, MSS lecture. And I think in the BPR lecture, we spoke about how one-sided deliveries will point out inefficiencies and how you trade when those fractals become efficient and when it doesn't. So you can remember for the longest while, right? When we're looking at ONS, remember when we used to do the live calls? The first thing we used to ask once we looked at ONS was what?
To see if it's efficient or not.
Exactly. Because when we can see if it's efficient, we could say, okay, since it's efficient, 50%. is where I should look for my key level. If it's inefficient, we target imbalances inside that. So that logic is pretty sound. You just used it in a different context, but it's the same logic.
Mm.
That's the thing about logic. Logic works everywhere. It's just about finding your own hunting grounds. And that's it. But yeah,
Yeah,
beautiful
That-
setup.
yeah, because I noticed once that down candle like came back, because I always hear you in my head saying, you know, when the down candle returns to a down candle, expect speed. So like this was okay, but once it came back, it was a poof. That speed was so much better, you know?
Indeed. Because
Yeah.
what was happening is the range was efficient when we're inside an efficient range and there is nothing to accumulate, we have to accumulate outside it. So think about classic consolidation explanations. The market consolidates to build liquidity on both sides. That's what we're told, right?
Mm-hmm.
But for me, consolidations don't happen until the market is efficient. Because what happens after the market becomes efficient is it needs to leave the range to find liquidity. And that liquidity is usually outside the range. That's why I put 2 and 2 together when ICT said, in consolidated markets, focus on 50%. But my interpretation of that statement was, in efficient ranges, focus on 50%. If the market is in a tight range and that range is inefficient, 50% means nothing. The imbalances win. And that's something that you can, well, not you per se, but everyone could investigate. Whenever the market it's been held between a high and a low, look inside if you have like gaps or inefficiencies or clear open imbalances. Once you can find those, then you have an idea where it's going. That's what it should target. It should target the inefficiencies inside the range.
Got it. Thank you.
Indeed. This should not be hurting anybody. If anything, that should be stopping you at break even. Oh, it's one big M1. Massive. And then 932 comes and the plane is over. It wipes away all of that big candle. So M1 is not offering much insights here. Let me see what's in the chat first. 50 more points up. You trade everything. It's a solid trade, to be realistic. Solid idea. Yeah, M1 is not offering any insights here. M5 is above the level that I wanted to see us reject. So while it's up here, there's nothing for me to do here. I don't participate under circumstances like this. So with that being said, I'm going to go and stretch my legs. I have no alert set. I don't know what this is going to do, but I'm going to come back. I'll probably check it in maybe 10 minutes, thereabout. But as long as it's above this red line, I want no part of it. Because then it's opening the door for, we have no idea where it's trading for, unless you're just going to pick a random high and say, this is the high. And I like rules around entries, exits, targets, everything. So it's been fun. Do enjoy the rest of your day. I think this is going to go back down. I don't know what it's going to do now, but yeah. I will see you when I see you.
Thanks, Kish.
All good, all good, all good.
Thanks, Kish.
All right, Jason, cool.
Grazie.
Thanks, bless.
All right, guys, enjoy the rest of your day.
Respect, big one.
Cool, cool, cool.